Welcome, ladies and gentlemen, to Commonwealth's first pod. Today, we're going to talk about three main issues that you probably want to know about. What is Commonwealth? You probably need to know that if you're new here. How the protocol works. It's very, very interesting. And if you're here, you're watching, you probably want to know exactly what the Genesis NFT does and how it benefits you. All right, let's do it, gentlemen. What is Commonwealth?
I always describe it just as, my mom or my dad who have a kind of sort of interest, obviously, in Web3 through me. They've never touched anything to do with Web3, nothing to do with Bitcoin, but they've heard about it in the news, of course. But they know their son also works in this space. I say, hey guys, download this app and then just check it out. And my mom and my dad would download the Commonwealth app from the iPhone store. And then they'd be like, oh, cool, look, what's this, a metaverse fund? And then they'd just push the button and they would be able to go in with like $50 or $100 through their credit card, which I think is really cool. So they wouldn't have to know anything about Web3. They're still not experiencing anything Web3. But in the background, that $50 or $100 gets contributed to a fund through permissionless protocol. So the smart contracts all start happening in the background, and the whole investment cycle is run through smart contracts, and it's completely permissionless, and there's no human management at any stage. And like Tony was saying, all of the transactions and all of the value that gets generated from that whole investment cycle right through to my mom or my dad getting their money back and profit potentially is value that's generated to a decentralized protocol. And the people who gain in the upside of that decentralized protocol are the users and the people who actually own wealth tokens, so the community of Commonwealth. I think it's amazing.
One of the things you said is actually really interesting that I guess I've never thought of it in that perspective. I always thought that one of the huge benefits of Commonwealth was the fact that that people can't afford to invest into a bigger fund that is usually has a at least a $500,000 minimum entry price, that's an opportunity for them. But in my mind, I guess I still thought that when they're making this investment into the fund, it's still it's still a really big investment decision. Like maybe they're allocating a large amount of their net worth into even Commonwealth. But when you just told that little explanation, it was also nice to think that people can just chuck in a small amount of money, even if it's not super relevant to their overall net worth, and be part of a fund. And I don't know why I hadn't really thought about it like that, but I guess because there will probably be, as it picks up, a lot of concurrently running funds. Yeah, you could just new fund coming up, let me throw 1% of my net wealth into there. No big deal. But because the barrier to entry is so low, that makes it possible, which is really interesting. Alan, you're part of the team, but you joined much later than the rest of us. What was your thoughts when you were told about Commonwealth?
Why am I so late?
Because you weren't invited earlier.
Well,
too busy working at Facebook.
The chance came, and it's interesting, because I was discussing that recently with Tim actually, and I was telling him that when I look at my career and things that I'm doing, it's always very mission driven. I need something, a bigger vision, a bigger goal, something I really want to achieve, and that really speaks volumes to me. And one of the reasons I was late to the party is I was at Meta, right? But prior to Meta, I was at Google, and this completes my journey. And I'll tell you why and what I mean by that. And in fact, in Google, I joined. It was this big company. It was the pinnacle of internet. It was mid 2010 plus, and I was thinking, okay, let's organize the data, let's organize information and make it universally accessible, right? So that's the core mission. Then at Facebook, what the core mission was getting the world connected, making it a better place, making sure that flow of information is better as well, and that people are more connected and communicating. And then this came along, Commonwealth came along, and the whole idea was, okay, now these people who are more informed, who are well connected, they have a chance to use all that and level the playing field and invest, and actually are empowered to take their financial future in their own hands. So that's the next step, and here I am.
So basically what you're telling everybody is that Commonwealth will definitely be the size of Facebook or Google, if not bigger.
You summed that up better than I could.
I just to make it really clear for anyone listening. That is a really interesting perspective. Also, I don't know. I do know we've talked about it like several times before, how valuable the community will be. We don't discuss it so much because right now we're building the tech, the protocol. But I do remember talking about it quite a bit in the early days and how valuable that community will be, and the reasons that we want to keep that people would stay within the community for the alpha to help each other out, want to due diligence, really learning, learning and connecting. And it's actually really powerful too, because most people have to think about doing due diligence on their own or don't really know who to talk to. But when you have a community that can help you and guide you through that and learn from each other, it's nice. You fail together, win together, and then you have that emotional support as well, because you're not doing it by yourself, which is always really, really, really helpful. What else did you find in that analogy besides the community aspect that maybe I missed?
No, it's not just community aspect. Now, of course, that adds a lot of value, but it's also the actual access, right? Because as a average person, as a normal person, which I'd consider myself to be as well, I don't have access to exclusive deals. I don't have access to a very large upside of investing in something before it actually completely takes off.
Right.
And I can't make that 1000x return. It's impossible, right? So in order for me to get that strong upside, I'd have to invest incredible amount of money, which I just don't have, and then I'm sidelined, and it doesn't feel right.
No, it's also, misunderstand me correctly, or if I'm misinterpreting, let me know. But what you talk about is like empowerment and sort of leveling the playing fields. First of all, the playing fields were leveled with regards to information. Like Web 2 made information accessible to everybody, right? And then, the Facebook thing sort of brought that connection to another dimension, right? The information was available, and now we're able to share news, and, social news became more important than, the traditional news channels. So now information is flowing in a much different way than it ever did before. Again, empowering people to be more independent with their thoughts and their analysis. And now we're taking it to the next level with Web3, where you can leverage that sort of empowerment that you've enjoyed when it comes to information and connection, but now use it to actually, hopefully, become more independent financially as well.
You all are worth, probably to get a job somewhere, you're probably all worth more than you're being paid from Commonwealth, and all left, better paying, bigger opportunity kind of positions to come in Commonwealth. What is it, Tony, we'll start with you. Like, what is it that caused you to, before you were doing Activision Blizzard and then went to some blockchain projects that raised a ton of money, I'm sure there was better paying salary opportunities on the table for you. And so why did you come to Commonwealth for this big
that's an easy one.
Decrease in
Had
pay?
this conversation this morning. Yeah, it was a combination of two things. Like, I had two initial interviews with Commonwealth, and on both occasions I was kind of shocked by how many people were on the call interviewing me. But what I loved about it was, even though I was still trying to figure out what the proposition was, and ultimately, the vision was there, but we still had a long way to go to figure out how we're going to get to market, what will we shape. And what I loved at the time was just the passion for what we were doing in the vision, right? It might not have been completely clear how we were going to get there, but there were these kind of quite experienced group of a mix of degens and technologists and product people who all wanted to kind of go in this direction, and really community seemed to be at the heart of it, right? People from all over the world on that call working towards a goal that also had this element of social good, I would say. So it was the fact, to Alan's point, I'm kind of mission driven a bit as well. Like, I spent most of my career building video games, kind of going, well, I'm not really, helping find the cure for cancer or anything. I'm helping teenagers shoot each other in the face. It's not the best use of my life, And actually, Commonwealth, timing was good. I'd just come off another big gaming project that was potentially another multi-year journey. And opportunistically, I met with you guys, and by the second meeting, halfway through the interview, I was in
Tony's a tech guru. He only spends his life in sprints.
Exactly.
2 week sprints.
I'm only thinking about it on my calendar now, not next week, now.
Yeah, no, I mean, it's interesting listening to Tony. I mean, I think my background is so different. You know, I worked for 12 years with Doctors Without Borders. I came from something that was more charity, more socially driven. And I suppose since my time in Web3, I've been looking for that lineage between, you know, what I did before and where my future is going. So, you know, VC investment is not necessarily something that I would classify as a social experiment or anything kind of socially minded, but Commonwealth is, in a sense, following that track. I mean, it's a DAO first and foremost, so there's no like single person who's benefiting more than anyone else. It's like it's joint, it's equitable in that sense. Anybody can be part of that DAO and share as an owner of this kind of experience, this venture. So I think it's not, I keep saying to Tony, like, we're not building a charity here, but we are building something that resonates much more on a social level than anything I could imagine in Web3. I mean, it follows the principles of Web3, but up until now, I haven't seen that many ventures in Web3 that kind of live the value system of decentralization and equitable access to the extent that we are doing at Commonwealth. So yeah, really enjoy that. And just considering my background, that was like something that really excited me, and I can't wait to see it come alive.
Yeah, it's mind-blowing how many times we get pitched. You know, Tim, you work as a VC, I work as a VC, and we see tons and tons of decks, and people are building in this space, but there's very few, I find, that are actually excited about building a product that people can use, you know, on a mainstream basis, and that has the potential to benefit, you know, 1 billion people on the planet, you know, and really building from the ground up and doing that, you know, the proper infrastructure to be able to scale, to be able to handle that, and are really thinking about who are the end users going to be, how can they use this technology, how can they use it, you know, in a friendly manner, and then also really thinking about and really understanding what it means to be decentralized, and then why it needs to be decentralized in the first place, because let's face it, most pitches we get, projects do not need to be decentralized. They usually have a token for whatever reason, and they typically don't understand why it exists. And they often have plans, you know, to have a centralized business model, and they're not really following that first principles of what a truly permissionless, open, censorship-resistant protocol is, right? Which is what Commonwealth is. It's a protocol, and I think that is interesting to think about, you know, versus there's aspects of it that will be, you know, built on Web 2 architecture in the early days, but the protocol itself will run on a decentralized, immutable, censorship resistance and fashion where it cannot be shut down, and it's just a machine.
Why does Commonwealth need to be decentralized? What's the value add for having it on a decentralized network? What does that bring?
You ask this question, and I think it's really risky for anyone to answer, because typically, more often than not, anyone who really truly needs to be decentralized is often disrupting something that is broken, and usually big conglomerates that have rules to protect them, and so, you know, usually when you really want to truly be decentralized, you're doing something that maybe not all the regulators around the world agree with, because you need to be censorship resistant, you know, and you know, if Satoshi would have been known who Satoshi was in the early days, you know, or if they would have known how powerful it would be, they would have shut it down, you know, much earlier. You saw how much people in Congress in the early days when they first started talking about Bitcoin in the United States Congress and stuff, that we need to stop Bitcoin right now and shut it down. It's like, you don't get it, bro. You can't stop it, you know, and so I think that it needs to be decentralized. One, well, you could do value distribution without it being decentralized, so that's not the right reason. But the right reason is because this is a community-owned project that is global, that will run its own governance models. And then usually what happens if it's not decentralized is that one person or a small group of people usually end up with the majority of the power, and then it becomes a dictatorship. And then they, in their own inherent human greed, ends up usually corrupting the whole thing in one way or another, where they're getting the lion's share of the revenue and things like that. Wherein a true circular closed loop token economy, it is, like you said, it's a really equitable thing where all of the value being created by the DAO is being redistributed to everybody holding that governance token and participating in the DAO. And we've been thinking a lot for the past year and a half of how to and I hear it a lot of times like, well, no one seems to have made a DAO work yet. And it's like, well, no, it's pretty true. I haven't participated in a ton of them. I do know that some of them that were just thrown up there, like mad respect to Colt DAO, but it has a lot of drama at times. There's no leadership positions, and so I do think that a DAO will have a lot of different structures, and I think that one of the things that we talked about while you guys were here in our workshops was, do even after the core contributors step away from, maintaining all of the stuff and it becomes the community's project where they make all the decisions moving forward, do we still leave or suggest, or maybe even the Constitution, that that people who have roles can be salaried and voted on and voted into and removed by the DAO members? Because I think that's an interesting model where when people just volunteer to participate in a DAO, they typically lose interest. There's no real incentive other than the bag that they hold to do it, and the bag is a nice incentive, but what we've seen so far, it's not enough incentive. They will step back and hope that someone else does the work or hope that it works out on its own. And if it doesn't, they'll end up losing faith and they'll sell their bag and then they'll be out. And so, and I just think that it's a really interesting way to bring value to a lot of people. When you have centralized business models, these for-profit models, usually a few people end up getting really wealthy, really rich, I should say, on the successful businesses. When you have
the GPs, you're talking about the GPs?
I mean, in general.
In general.
Amazon, whatever, Google, how many of Google's employees are mega millionaires? I'm sure a lot of them, but not.
I don't know. How many is it, Alan?
Not the lion's share.
Only the VPs, I'd say.
Only the VPs, right? And there's tens of thousands of other employees that aren't.
Yeah.
There's a much better chance for that to be more, fairly split amongst all the participants in a decentralized model, because the value is not being extracted by those few people. So all the people that are mega rich from Google, imagine if that wealth is more fairly redistributed. So everyone from the founders and all the VPs, if that was redistributed to all the employees, Alan would probably not be here right now.
That's how much credit you give me.
I'm just kidding. I know you're here because I know you're not here for the pay. But seriously, everyone, it would be a much different type of situation. And to build on that too, when we get a lot of projects that are doing a token model and an equity model, and I always ask people, like, you seem to be half-assing both, because only one project, one team can create X amount of value, and if that value is being split, well, if it was all being driven to one place, it would be much more valuable, right? Mm-hmm. But you're splitting the revenue, and they both become less valuable. Why not just create a beautiful model like Commonwealth has and push it into one basket?
It's like we say, isn't it, Tony? I think it was you that came up with the term, every LP is a GP in Commonwealth. And for those people who don't understand what an LP or a GP is, like I'm in the fund world, and a GP is a general partner. So they're the ones who take all the upside. So whenever their fund does really well, they receive success fees, and then that's value that they own. They distribute that to themselves. In that case, all good and well, but the LPs essentially are just the ones who are able then to take the value that their fund has gone up in. So they share the sort of the rewards, but they don't share the management fee and the success fee. Yeah. So in Commonwealth, every LP, so everybody who's invested in a fund or anybody who holds wealth tokens, is a GP. There's no special status for anybody in this whole venture, which I really, really love.
Yeah, I think the other thing that's interesting about our model as well is that when you, as an investor, and you invest into a fund through a VC, you effectively give them control of that asset for an indeterminate amount of time, and you've no say over what happens with it. I think our model allows us to, one, not just reward people in proportion to their investment in a much more equitable way, but also give them a say in proportion to their stake in governance and how the platform and protocol is run, both in distributing, rewards from the platform or protocol, or I think another thing we didn't touch upon, I think there's a number of advantages of decentralization and the technologies that we're using, which again allow us to disrupt the model in that we can have a liquid investment at all times. Somebody can sell any part of their investment in whole or in part anytime they want on the open, on the secondary market. I think that's something that's quite new. Even into Web3 models, I think it's quite new.
I'm gonna explain just quickly the LP versus GP for anyone who doesn't know what that means. So GPs of a fund are general partners who typically manage the fund. They deal with, they're the managers, the bosses of a fund. And LPs are typically the people who give the GPs money to invest in the fund for liquidity.
But the limited implies they have a limited role as well.
Yeah.
But
So
not limited risk.
No, unlimited risk,
the downside.
limited
But
involvement.
that's the thing, right? It's unlimited risk, whereas the upside and the reward is partial, because the rest goes to GPs.
yeah, we'll talk. I mean, even in the Web3 example, let's talk about the Grayscale Bitcoin Trust. When Grayscale was thinking about that, the whole thing was at risk and everything was trading. I don't know what it's trading at right now, but it was, people were talking about the fact that that the company, what is it, Grayscale? Yeah, Grayscale was making all those management fees, right? Because they're managing a bunch, but people's investments was going down quite a bit. And so you have a situation where a lot of funds that are managing a lot of money, they're still making that management fee, which is, making them a ton of money. And even if they lose, they still got rich, when their LPs, had a, maybe didn't make it in that. But can you explain though, because I think that for, in that analogy of every LP is a GP, I don't know if that was very clear. We understand being in this, but maybe for anyone who doesn't really understand fund structures, can you explain what that means?
Yeah, so I mean, I think those of us in Web3 sometimes see LP and then we think liquidity provider.
Yeah.
And when we talk in the fund world, like Kyle said, limited partner is something different. But in this instance, they're actually quite similar. They're quite connected because providing liquidity to the protocol, you can either do it through buying wealth tokens or you can do it through investing in a fund, right? Therefore, you're either a liquidity provider or a limited partner. So you're an LP, right? We're just using the same kind of umbrella for both. In that sense, every LP becomes a GP because when this protocol becomes valuable, which is through running its operations, which is investing into different fund structures, and then if the funds are succeeding, then taking that success fee into the protocol again, which gets distributed again right out to all of the LPs. So every LP is a GP. Everyone is benefiting from the success of this whole operation.
Yeah, and that is that assuming that the LPs in the fund have wealth tokens?
It is, and then then they're a liquidity provider and an LP. But yeah, right. So if my mom or my dad just goes in for $50 and doesn't buy wealth tokens and doesn't stake them, by the way, if you stake wealth tokens, you can bring the management or the carry fee, the success fee, right down from 50%, which is the default setting, right down to 10%, which is way better than any market rate you can get if you invest as a limited partner in a conventional fund model.
Yeah.
So you can get like super low fees by staking wealth tokens. But if you don't stake your wealth tokens, then you're also maybe not a wealth token holder. Then you're not entitled to proceeds from the whole protocol, from the revenue, right? That's normal. You're just a user of the app.
Yeah, and that's going to be fine for some people.
Yeah.
And I think when some people see the initial fee structures, like Tony did the first time that I proposed them, it can be shocking if you're used to the normal 2 and 20, 2 management fee, which is 2% of the annual AUM of a fund, and then the 20%, which is the success fee from all the profits made in a fund. When we propose something like 10 and 50, that could be quite shocking to somebody who is used to those other structures. But when you break it down and start to think about the fact that, your average fund who charges 2 and 20 typically is expecting to get something that in the tune of like 6 to 13% is considered pretty good on returns. In crypto, most VCs do significantly better than that. Certainly better that usually the difference will make up for that, even if it is a 50% success fee. But you do have the ability, and also I should mention that 10% is also a very high management fee. However, what's nice about that, and if you are holding wealth tokens, that ultimately does benefit you because that will go back to the overhead and operations of the project, which will then negate the necessity of the operations to sell wealth tokens in the market to fund operations. So yes, a typical management fee is 2 and 20, but the typical fund length is also 10 years, and that's 2% annually. So even though at first glance, a 2 and 20 seems like it's 2 and 20, it's actually something like a 20 and 20. And then that could even, and that can even go up more depending if they extend that length, or and as the AUM goes up, that's 2% annually. So Commonwealth is proposing 10%, and that's it. No matter how long the fund length is. So if it's so at 5 years or more, you're actually doing better than traditional funds. But additionally, that 10% is just preventing sell pressure from the wealth tokens as it goes back to overhead operations, as Commonwealth wants to have 4 years of operating capital in its treasury at all times so that it can sustain bear markets and continue to fund operations without having to inflate the token supply. And then additionally, so if that doesn't seem good enough, you also have the ability to stake your wealth tokens, which is an investment, but not a purchase, not a you don't burn your money. You're actually just trading one asset. You're usually you're hyperinflating fiat currency for a super deflationary, really good wealth token for a period of time, and then you do have that cost of capital, for that time that is locked, but that does allow you to reduce that success fee all the way down to 10%, which is at least 50% less than most venture funds. And so it is really flexible, and it aligns you, right? When you have those wealth tokens, you start to feel good about the different type of things that happen, like on-chain tax and all the kind of fee structures that happen and the different flows and the way profit goes through the whole ecosystem. And that becomes really, really attractive.
One thing worth mentioning as well in terms of a differentiator from traditional startup investment with Commonwealth is that when you put your money into a startup, one example would be I invested in a fintech startup back in 2014. I still haven't seen a return from that fund yet, and I won't until that company exits somewhere along the line. Mm-hmm. Whereas with the Web3 model, once the project has gone through its initial cliff period, you literally can start harvesting after a year, and that's every month. Right? So if that project's doing well, you're actually getting your money back much faster. And as we mentioned earlier on, it's always liquid also through the NFT. So there's some very superior advantages.
I just want to pick up on that always liquid through the NFT piece. It's very, very simple whenever you say it for people who are in Web3 to understand what you mean. And I even don't like to associate NFT with this because people are thinking, oh, what's a Bored Ape got to do with this?
Yeah.
But an NFT is just a non-fungible token. So it's something that's imprinted on the blockchain, which is, can't be ever disputed, the ownership, and can't ever be, kind of faltered with and sort of manipulated. So essentially what you're getting when you're an investor in a Commonwealth fund, like my mom or my dad again, they'll go to their app and then they'll see in their wallet NFT or digital kind of collection, and it'll show a digital representation of their investment into the fund that they made, right? So whatever it was, $100 or $50 or whatever. Or it could be 10,000. You don't know who my mom or dad is. So yeah, they would have that, and it's just this digital item that they can push a button and immediately kind of split that into two pieces. So if they decided, oh look, I think my fund's NAV, net asset value, which is like the value of my fund has gone up like 2 or 3 times since I invested. Now is a good time maybe to de-risk a little bit. Yeah. And so split your NFT or your digital representation of your investment into 2 pieces. Sell one in the secondary market. Maybe the secondary market doesn't give you the exact value that you associate with that NFT because it's a market. They'll place the value maybe 10% less than what it might be worth in terms of the NAV, or not. It could be 1% less, and then trade that. Then you're liquid on half of your investment. Maybe you've recovered even your initial investment, and you've still got this other NFT that you can keep or trade later. It's a really interesting feature.
There's even people might actually price the NFT above NAV because there could be an amazing amount of projects that the fund has invested into that haven't been priced in yet. We do know that at really bullish markets or when anything's trending a lot, we could look at NFT collections, we could look at IDOs. public sales of tokens, launches, listings, things like that. There's a lot of people who have a lot of interest in participating in something, but there may be a finite amount of room for them to participate. So everyone who wanted to get in, couldn't get in. And so I can even imagine a world where, maybe a $10 million fund, let's say a $10 million metaverse fund opens up, and the second it opens up, we won't go into too much about the perpetual fund, the evergreen fund, but that's already probably going to take 10% of the fund, and then everyone else will kind of come in, FOMO in, and that the rest of it gets filled immediately. And there might be hundreds or thousands of other people who wanted to get in, but they were too late. They didn't, they were sleeping, whatever. And somebody, people could learn that if there is that much demand and it is that successful, these funds might sell out like that, and people might buy more, invest more into the fund than they actually anticipated, and then immediately on the secondary market start selling the position at 2x, 3x, something like that. Same thing that people do in NFTs today. Is it also an interesting thing? There's a lot of things that become
I haven't
interesting.
thought about that actually. Yeah,
Yeah,
you're
there's
right.
a lot of things that become interesting when you think about the ability for your positions to be liquid immediately on the secondary market.
Saying it's liquidity on request, and then that's a huge upside,
Yeah.
huge benefit.
No, it's mad. I mean, if you're in the traditional VC game, a couple of us are here, and the amount of times I would have fancied, getting a little bit liquid out of my portfolio, but just not possible in any. Well,
100%.
you could do some like dodgy over-the-counter kind of deal with someone, but they're really difficult to set up those things.
Nothing
so,
in a trustless way. No.
no.
So the Genesis NFT holders, they sold out. The first 2,000 sold out. Congratulations. I don't know that it's clear for everybody exactly what these NFTs do, and do they have, perpetual value, or is it, just maybe I heard some tokens attached to it or something, but why the Genesis NFTs and what do they do?
I can tell you why I bought them. No, so the NFT is essentially, again, using the word NFT maybe is confusing. Like, what does profile pics or kind of JPEGs got to do with Commonwealth? It was an alternative way for us to dilute the ownership of Commonwealth to the community immediately. Mm-hmm. So what's very interesting about Commonwealth and the way we've structured the go-to-market is that we haven't taken on private VC investment. We haven't gone to our sort of normal tier 1, tier 2 networks and with a pitch deck and say, hey, we've got this really great idea for Web3. We'd love for you to invest and give away, large chunks of the treasury or the allocation to private investors. That hasn't happened at all, right? So what has actually happened has been, hey, community or people who might be interested, we're building something. The team is amazing. We can't talk too much about it because we don't want to reveal yet, just because we still need to build things. But if you are interested and you like the sound of it so far, you can buy this NFT, the Commonwealth OG Genesis NFT, and later it'll be revealed, what the value proposition is. It's essentially it's a promissory note for 44,000 governance tokens. So you are becoming a Commonwealth community, a big part of the Commonwealth community, just by owning one of these NFTs. It means that you can later on stake your governance tokens for discount using on the app, or of course you can use it to govern the DAO. You can use it to govern Commonwealth. So 44,000 of the governance tokens is due to you as a Genesis NFT holder. It's really cool. And the value you might have bought it at, if you minted one, that's $500. That is putting a valuation, fully diluted valuation, on the protocol of $11 million. So that's where you've essentially bought into Commonwealth. And there's one more feature which is really, really awesome. 15% of the profit that the DAO generates, so running the machinery, will generate money. We've talked about that. All of the money, the added value that gets generated, increments of value that the protocol creates, goes back to the Genesis holders through 15% of the profits. So 15% will go automatically and be distributed for life to the people who own these Genesis NFTs. So it's an incentive to never get rid of this thing.
Nice passive income.
It very well could be. I mean, I haven't done the maths myself, but if this becomes something that generally a lot of people use, then you know that NFT itself can generate quite a lot of passive income for
You made a
forever.
mistake there. You said if, you meant when.
Of course I meant when. Of course I meant when.
I
yeah.
struggle with that. I'm always optimistic, but people are, yeah, anyway, it's when. That's well said.
No, but I think what Tim said, you know, for me it's very special. The Genesis NFTs are very special because it was a means for us to stay true to our ethos, that we're community first, have been, are, and always will be. And it gave the opportunity to our early backers and people who partially blindly trusted in this vision to be part of the journey so early.
Very blindly.
Very blindly. And now we're here. Now we're talking about the actual product. We're talking about the 15% profits. We're talking about everything that we're building and in a best possible way and for everyone. And I think that's very exciting. And that's why I bought my Genesis NFTs too.
Yeah, I think it's also like a rarity thing as well, right? There's not going to be like a lot of these things ever in circulation. There's only ever going to be 3,500 of these Genesis NFTs, right? Yeah. So 2,000 are already gone.
Then, of course, there's more exciting utility to come to the Genesis NFTs, right?
There is a lot of utility still to be revealed around that. I don't know if we're able to talk too much about that now. Is there anything?
That's fine. I mean, we could leave it. You've got to leave a little bit, discreet. But how are the because deal flow, especially in bull markets, can be really competitive amongst VCs, and so how will Commonwealth get good deals, and who's responsible for bringing those deals to the table?
I think the idea there, if you look at the track record of the founders and the initial council on the website today, you can kind of see the pedigree that we're talking about, and we believe we'll have no trouble getting allocation into some of those projects going forward, particularly when we reveal some of the cool technology and features we've been working on specifically in the space. We're pretty confident.
What I love about the potential of Commonwealth is, in fact, the ability for this thing to just grow and grow and grow. It's very, very exciting, and a big piece of that is the council, the way I see it. We are already lucky enough, the people sitting here, and like Tony mentioned, the ones on the website, to have access to incredible opportunities to invest in just through our networks. So us as the early kind of council members is already kind of quote unquote like guaranteeing, very good deal flow and access to deal flow. Not only that, we also have great networks collectively, and we've talked to quite a few VCs already about Commonwealth, just about the idea of what we're doing, also because it is going to affect how people view venture capital in Web3. We've talked to them, and the initial feedback is, hell yeah, like I'd love to be involved. Maybe not as their company or their institution, but as the individual who is part of that institution. I'm not going to name any names right now, but there's definitely interest already. And as we get more sort of visible over the next few months, that interest is likely to get more and more. And then, of course, as we get closer to launching the product and there's an application where you can actually invest into a fund, at that point, there'll already be some really exciting deals that have been procured and available for the community to invest into. And at that point, if that's not enough, then once those investments start to do well, more people will be attracted towards Commonwealth to use the application. More people that are attracted, bigger interest there is in the council seats. And there's not going to be unlimited council seats. There's going to be 20 or so. And those seats you won't be guaranteed one for life. The community will vote you in and out of those seats based on, how much value you're bringing to Commonwealth at the time. And if you're bringing lots of great deals, there's a good chance you'll keep your seat. If you're not bringing great deals, then, please can somebody else take that seat, right? And then if that quality, quote unquote, increases over time, more people are going to be interested to invest in Commonwealth. And you can see what's happening. There's kind of like this cycle effect where everything is improving itself, and we're not doing anything. The protocol is doing everything. So I find that very exciting, just looking to the future.
even as a VC, when you think about it, not you're talking about individuals, you're talking about VCs as well. But I'd also say when you have these projects as a VC company, and all that you care about is to make them a success. And here you have a platform, you have an eternal machine, which can create awareness and consideration and can back your projects.
Yeah.
Hence increasing your success rate. I find it difficult to find a reason why not to do it. Why I wouldn't come and use this. It's not a sounding board per se. It's more like an ultra strong speaker that you bring and that you use to get that message across. The megaphone is the word I was looking for. That's what it is.
One of the things that I like to, when I'm describing circular token economies, I just say, like, imagine an institutional legacy type of thing. Let's take BlackRock or A16Z or Sequoia or something, and then say, imagine if all of that value created was put into the market cap of a project. Even Binance, right? So imagine if Binance got rid of their equity model and all the value created went back into the BNB token. It would damn near be, competing with Bitcoin at this point, probably, right? Certainly Ethereum for sure. But it would probably be number 2 market cap in the space, and that is powerful, and it's really interesting because it is real value creation and offering real products to people that are generally interested in this, for one aspect of their life to make hopefully increase their wealth. And it's not some gimmicky kind of fake yield thing from inflationary tokens. We haven't really seen something very interesting that appeals to a large percentage of the population on the planet that has been put out there yet. And that's what this space is supposed to be for, is building products that the masses can use that make their life better. This is what makes me really, really excited about this project.
Speaking about building products, we have Tony here, and I think hopefully the people watching understand Tony's background. But I always say what Tony's forgotten about tech, I'll never even be lucky enough to learn. So it's like it's a really great pleasure and privilege for us to have someone like Tony, who's been working on this project for more than 12 months now, helping design and build at Commonwealth. I think it'll be interesting to just let the viewers, let people know, or the listeners to understand what's actually been done in that 12 months. And, where are we, with this thing? Because it's unusual, again, the way we're doing things. We're putting product and build before hype or exposure. We want to be the antithesis of most projects that I come across in the VC space, which is that, you raise a load of money and then you think about, okay, how am I going to build this thing? We've been bootstrapping and really trying our best to build something, get MVP, and then sort of under promise and very much over deliver. So that's been the intention. How's that going?
I think you hit the nail on the head. Like, the intention from the beginning has to build something of substance, right? Not go out with a pitch deck and promise to build the Earth, Moon, and Stars and then try and raise money, but to actually start putting the pieces in place and try to solve some of the problems as we go along, right? So I think we've done a number of things. We also know that we're still growing the project, and there's still a number of challenges ahead of us, if you like, both from, in a number of different strategic areas. So I think we've taken the philosophy of not having to build, how to put it, only building what we have to, but using the best of what's available in Web 2 to get us so far, and potentially helping bridge that experience to Web 3 for retail investors. And to that extent, we're having to go off and solve a lot of problems, as a lot of people in the industry are, around, what's the best way with the least amount of friction to onboard a new user? How do we accommodate the various different user types and the various transactions? And I think, trying to make smart bets, one of the things I've been keen to do is keep our options open, because it's a very fast moving space, right? Technology is moving at an incredible pace. So I think maximizing our options, trying to make decisions that are based on Web3 principles or that we can live with for now until we're actually able to find, you know, a decent Web3 equivalent that we can live with. One of those might be, say, wallets or messaging, for example. And to Tim's point, you know, we spent a lot of time on the tokenomics side of things. We still go over that regularly. We've had a number of people consult on that with us. We pull that model apart and those transaction flows apart and put them back together many, many times. So it's well stress tested at this point. But I think a lot of the areas would have got into in designing the platform end to end, kind of, and looking at really where we want to get to over the next kind of 3 to 5 years. Only building out the pieces that we need right now and still leaving ourselves optionality later on. Because with the best tool in the world, and even with the team we've assembled, as I mentioned, the technology moves too fast, and you kind of need to be able to stay quite nimble, I think. Yeah, I think one of the areas we're going to continue to invest in over time is looking at removing as much friction as we can from things like authentication, making sure that we're able to do things in a user-friendly way for the crypto curious, but that doesn't really compromise on the full Web3 experience. So we spent a lot of time, for example, looking at, like Alan can attest to, he and I have worked in Web2 for decades, right? And it's entirely, the strength of it comes from the data you have on your users and being able to model those workflows, the call to actions, and even to help mitigate any kind of problems you may have. And I think we spend a lot of time trying to figure out how can we do that in a very privacy-focused Web3 way, where we don't know the individual identity of a user, but we don't need to. We're actually able to do a privacy-focused data model that operates, the platform will operate off of, where no human being can ever see that personal information or decode it. It's entirely encrypted. But the platform is able to respond to those events to provide that best experience and support. And it's some of those softer areas that we don't talk much about, but they take a long, long time to figure out. How do I take a Web3 technology, graft it to a Web2 technology, remove a whole load of problems, but craft a really premium experience for a user, like your grandmother, your parents, exactly, who want to be able to dip in and out, right?
And how far on the technology development is the project?
That's a very good point. Yeah, I'd say, well, to Tim's point, we left it quite late, I guess, in some ways, to kind of announce where we are. So the good news for us is that we're pretty much, I'd say we're about 60 to 70% of the way through of version 1. So, you know, we're talking about launching between 3 and 6 months from now, right? So we have the fund pieces built, authentication's built out, staking is done, the fractional NFTs are done, the transaction fees, treasury. So it's mostly actually the community piece has been built as well. So it's really a lot of the glue and bells and whistles, like notification system and the call to actions and the content on some of the screens. That and testing really are what remain to be done.
Nice.
Yeah.
Well, guys, I'm glad that we got to sit down here, and I know it's just recently announced, so it's good that I believe that people got to see and hear from each of you. And thanks for being here.
Thank you very much, Kyle.
Thanks for having us.
Thanks for having us.